There were 5 key takeaways, I think, for financial planners from the autumn statement, and I'm going to look at those now. The first was in relation to pensions, and the takeaway here is that it's a question of when, not if, I believe, in relation to some kind of fundamental reform of pensions. We were reminded in the consultation document on the money purchase annual allowance, which was released at the time of the autumn statement, of the high cost of pensions tax relief. We know that the gross cost is over £40 billion, the net above £30 billion. We've also seen recently a report from the Public Accounts Committee questioning how good HMRC are at relating value to the cost of tax relief. So dynamics like this, I think, will just continue to press on the government to look again at the cost of pensions tax relief and whether that money is being spent in the right way. What we did get in the autumn statement, so that is one to look for fundamental reform, but what we did get in the autumn statement was a consultation on the money purchase annual allowance, bringing it down from £10,000 to £4,000. Really, the motive there is to prevent recycling, according to HMRC, people putting money back into their pensions when they start to draw it down. They feel that they shouldn't be giving tax relief at too high a level in those circumstances. And we've also had a proposal to look again and squeeze more tightly offshore pensions generally, and that will bring into play QROPs, QNUPs and 615 schemes. So I think the future for those sort of schemes will be a little more constrained. So that's where we are on pensions, and it's covered in a lot more detail in our Techlink bulletin. The second takeaway is on corporation tax, and the only way there is certainly not Essex, but downwards. We've seen the rate coming down from 20 to 19 from the 2017 financial year, and it's going down to 17% from the year 2020. There's also the fact that with the Americans, Trump in particular, specifically, talking about bringing the corporation tax rate down to 15%, we have our Prime Minister Theresa May saying we need to remain competitive with the rest of the world. So we only see a further downward trend for corporation tax that's already set in stone, as it were, in legislation, and we'll see where that goes in the future. Good news for advisors in that respect is that it makes trading through a company an attractive place to be. So those operating in the corporate market may just see a little more money freed up to invest into pensions and other investments that might be appropriate for the company. Inheritance tax, well, that was more a case of what didn't happen. We still have the frozen nil rate band for a number of years yet, and no significant changes, although there again some form of simplification couldn't be ruled out, we don't think, in the future. We've got changes to come, quite detailed changes on domicile, which will go much further than inheritance tax, by the way. It will cover domicile in relation to all taxes, and we'll have more detail on that in the finance bill. The fourth takeaway is in relation to investment taxation, and again it's a kind of neutral to nothing position, because we've had significant change already with investment taxation, and we're living with those changes quite favourably in the current tax year, because we've got the £5,000 dividend allowance, we've got the savings, personal savings allowance, and we've got the CGT rates coming down. So what did we get with investment taxation? The main takeaway here for advisors is the note from HMRC that they will be implementing changes to the well-known 5% rule in relation to part withdrawals from investment bonds. We'll get the detail in the finance bill, and they've said that past gains, historic gains, though they haven't defined what they mean by historic, will not be taxed in a harsh or disadvantageous way, and individuals will be able to apply for a recalculation for any past gains. Now, we're not sure how far that goes back, but they will be able to apply for a recalculation on a just and reasonable basis. So again, something else to look out for. And lastly, of course, we have the continued relentless drive against tax avoidance, unacceptable tax avoidance by companies and individuals. As I mentioned in relation to pensions, all of these changes are covered in quite a bit of detail in our autumn statement bulletin and in the follow-up bulletins within Techlink, particularly on the pensions changes. So go to Techlink, have a look, get informed.